The International Monetary Fund saying South Korea may have room to almost double interest rates as the country's economic recovery is a strong one. South Korean exports, well, surging almost 30% in August. The IMF projecting GDP growth of 6.1% for the country this year and 4.5% in 2011. Well, earlier on I asked the IMF's Asia-Pacific Division Chief Subir Lall why he's so bullish.
The Korean economy is recovering very strongly from the downturn that took place in the last quarter of 2008. And what we are seeing now is a maturing of this recovery with a shift from the public sector to private sector sources of demand. And also what we are seeing is a shift from consumption on the domestic demand side towards investment and further rebuilding of inventory. So it's a maturing of the cycle. And we've had strong growth in the first half of the year, and we expect some moderation in the second half, in line with what you see in other export-driven economies in Asia.
So the risks really come from abroad, don't they?
That's right. The main risks to the outlook are really if there is an unexpected slowdown in demand from the advanced economies. Korea, to some extent, is shielded because the exporters are well diversified into emerging markets, but Korea still depends on final demand from the Western consumer, and so that is the key macroeconomic risk we see to the outlook.
What about predictions about the Korean won also appreciating against a basket of currencies here? I believe there's some of the banks, investment banks, are slating sort of a 5 to 10% increase in its value. That could affect things adversely too.
On the question of the won, of course, there was a big depreciation right after the crisis, after the collapse of Lehman Brothers, and it has recovered to a very large degree. And then we've had the big wave of capital flows coming into Asia and also into Korea with its deep and liquid markets. That's also put upward pressure on the won. However, the link between the won, the exchange rate, and the Korean export performance is not quite as direct as is sometimes made out to be. And the reason I say that is if you look at the three main categories of exports from Korea, say shipbuilding, electronics, and automobiles, they have different reasons for the recovery. Shipbuilding, of course, orders dried up because of the collapse in global trade, and now it's revived. As far as electronics go, and also automobiles, the Korean exporters have been very good at expanding capacity because the corporates entered the crisis with strong balance sheets. So while their competitors were not able to get financing, these companies were able to expand production and also, of course, take advantage of demand in emerging market economies. So they expanded market share, and that's how they benefited. I think, the small movements in the exchange rate affecting the strength of exports is probably overstated. There are much more fundamental factors at work.